Hi, this is Josh Siegel, CFO of CyberArk, and you are listening to the CFO Thought Leader Podcast.
This is episode 1084.
We've been experiencing a period of high growth the last few years. I mean, this is a hot market. There's a lot of opportunity here. We've been growing our ARR number close to 30%. Half of that is through new logo acquisition. There's a lot of companies out there still primed for a more modern solution that we can offer at scale. But also, we've been focused on doing this responsibly, we'll say, and doing it profitably. So we're really focused on having this balance of growth and profitability. I will say when you're growing close to 30% on your ARR, we like to favor a point of growth over profitability, but we understand the longer term dynamics of delivering both for shareholder value.
It was a late night conference room lit by the glow of Excel spreadsheets and cluttered with half-empty coffee cups. Brian Carolan, then a rising finance executive, looked around the table and saw not just fellow accountants and analysts, but a collection of people from different parts of the organization. They were staring back, waiting for Carolan to utter some words that would bridge the company's data and strategy. It was then, at that very moment, Carolan tells us, he experienced for the first time the weight of CFO responsibilities. You'll hear about that conference room and much more on today's episode. Our talk with CFO Brian Carolan begins after this.
When it comes to company spend, most finance teams are on defense, reacting to surprise spend, chasing receipts, saying no. But there's a better way. Meet Brex, the AI-powered spend platform that boosts a company's control, earnings, and speed. 99% of customer spend is compliant. 11 million hours saved on expenses and accounting through automation. $681 million plus dollars back to customers in business building rewards. Make every dollar count with Brex.
Hello, we're speaking with Brian Carolan, CFO of SailPoint. Brian, welcome.
Hi, Jack. Great to be with you today. Really appreciate it.
So, Brian, if you trace your career back in time, back to the early days, we're looking for you to identify some of those special moments, those specific times, whether they were challenges or milestones, unexpected detours. What do you believe most influenced, let's call it your readiness to step into a CFO role?
That's a great question, Jack. So just to step back, just from a personal standpoint, first of all, thank you for having me. My office is actually being painted right now, Jack. So I'm actually sitting in my son's room. So forgive the background.
Perfect.
But, so I see all sorts of fun things in the background here. So born and raised in New Jersey. I'm in kind of Bruce Springsteen country, as I like to call it, down here along the Jersey Shore. My undergraduate work was at Villanova University. Graduated there in 1993. I was an accounting major. People often ask me, why accounting? And I say for a couple reasons. One, I needed a job, and I knew that I would get a job with accounting. So that was almost a guaranteed thing. No, but in all seriousness, I thought it was a great foundational experience for me and a foundational subject area for me to major in. And then I started my career at Ernst & Young in their audit and assurance practice. Got my CPA, spent a little over 7 years there. And I think, that gave me a great foundation for a few reasons. One is, I think every year you spend in public accounting, it's worth like maybe 2 elsewhere, like in private industry. I just think the level of expectations that's put on you as a very young professional, it's healthy. I think they treated us very well. They treated me very well. I've got a lot of great memories there. But I also really appreciated the fact that I didn't have to specialize in one thing right out of the gate. I was able to experience multiple industries and multiple different clients along the way. And really, work on some larger clients, some smaller clients. And I think that really was a great foundational set of experiences for me early in my career. I did pursue my CPA, if I didn't say that already. Also got my MBA because I wanted to round out that, accounting background, but also have, an MBA in finance and learn more about, running a company someday from a CFO perspective. So this was back in the days when you were able to go from working in a public accounting firm to actually going to work for one of your clients. That is still possible today, but it's a little bit more challenging, and you're not able to step into a financial reporting role right out of the gate. But that was not the case back in 1999 and early 2000 when I started transitioning to one of my clients. And that client was named Commvault. We were private at the time. I was a very young controller. I joined there end of 2000, actually early 2001. I was 30 years old at the time. We were a small company, but, I had to kind of up my game in terms of, seeing this now from more, being part of the operations of the company and helping them out and helping them grow. And I would say that those first few years were very challenging just because, this was during the dot-com bubble. I think, we weren't flush with cash. I had to manage, the cash balance and, make sure that I was inserting myself into the business and also, eventually getting the company ready from, systems and process perspective to be able to go public at some point in time. But again, a good set of challenges. I think I parlayed my experiences at EY, that foundational experience that I got, then went to work for one of my clients. And from there, I had a very long career there. So I can go on for a little while.
Two decades, just
over 2 decades. Which is,
in case you thought we wouldn't notice, that is quite a span of time.
Yeah.
And it was 7.5 years at Ernst & Young, which also speaks to you. I mean, you're someone who really invested career years with the companies you were part of. But continue. I'm sorry. And I know you make it, you had 6 years, or what was it roughly? 9 years actually in the CFO office at Commvault. But so half the time you were there nearly. You were the CFO. But tell us a little bit about the climb then. You arrive and was the company, what size company was it way back when, 21 years ago?
Small. Yeah, very small. It was, we were new. Into the space we're in the data protection market. It was early days for that. We were 250 employees. Revenues were, less than $50 million back then. Private, as I mentioned. By the time I left, over 20 years later, we were at an $800 million run rate and obviously profitable and generating cash. And they've done very well along the way. But I got the good fortune of kind of growing up with the company. And I feel really blessed for that, just because, came in as a young controller. Again, survival mode in the beginning, just learning how to run the company and manage it. Muscling our way through some ups and downs early. But we did get ourselves in a position to go public in 2006. And that's at the time when I was promoted to chief accounting officer back in 2006. And again, now you're public, it comes with a whole new set of challenges, right? Different challenges, I'll say. And one thing I knew early on is that I could not afford to just stay in the swim lane of being a chief accounting officer. I needed to be much more operational in nature. I had some very good mentors around me, from the chief operating officer to the CEO. And they challenged me to say, okay, let's forget about the accounting. Let's go and focus in on the business and how are we going to operate the business in terms of metrics and forecasts and processes. And I really actually enjoyed that part of it. Not that I didn't enjoy accounting. I actually liked the operational aspects of the role even better, or even more. And I would say that we were so small, I didn't have the luxury of saying, well, that's not my area, or maybe somebody in FP&A should do that, or maybe we need a strategic finance member. I actually wanted to take it on. And we built up a really, really nice cadence where we would have monthly operational reviews, not quarterly, but monthly. We would do, weekly flash reports. We would do predictive analytics in terms of where we were for the quarter and how things are shaking out. And so I got really good at the operational aspects of the business. I also hired, I think, really good talent around me. I like to see people who can actually then someday even maybe do my job. I like that. You're only as good as your teammates. And I had really, really good, solid talent around me. And that enabled us, to implement better systems and processes and dashboarding to support the growth profile of the company itself.
Well, that type of environment, then, having to grown up in that and get the opportunities come your way, again, as you described, a controller is for a while. You're the chief accounting. That means the CFO is turning to you all the time, but you get the CFO. About 6 years later, you step in to the CFO office around 2012. Then, is that right?
That's right. Yeah. That's right. And I think it was really, I had to prove myself before that was just given to me. And I think, again, me being in that operational chief accounting officer role and kind of running the financial operations and also just even FP&A, again, we didn't have the luxury of like adding additional teams. We needed to just figure that out on our own with the people that we had in place. And I think that really gave me the ability to, again, see the bigger picture of things, understand the business intimately. And, I was just very fortunate to work for really good people such as Bob Hammer, also our chief operating officer, Al Bunty, and then my former CFO, Lou Maselli. I mean, just great people around me that, had a lot of trust in me, had a lot of confidence in me, and I think enabled me then to step up into the CFO role in 2012.
I mentioned there at Commvault as CFO, it was nearly a decade. And I'm just wondering, across those years, how did the CFO role itself under your leadership, what were some of the changes that you witnessed or the evolution of that role? How did it change for you?
Good question, because nothing is ever linear, I think, in life, right? So it's not just straight up and to the right. There's going to be some fits and starts and some challenges that come along. First of all, I think we did a good job of building for scale. So we had kind of the best in class systems and processes in place in order to serve the business as best as possible, and also serve the company as best as possible. From there, I would say that one of the skill sets I needed to get up to speed on was just capital markets in general, and I got to learn from really good, experienced people on that, such as Bob. A lot of fun going on the road with him after every quarter, no matter what the quarter was. We'd get out there and get in front of investors, and made it a priority to do so. And I really learned how to handle investor relations and understand just the complexities of getting in front of those shareholders again, time and time again. So I think that was a great learning experience for me that has carried me into even today. But again, as I mentioned, in technology, things change quickly, right? And if you're not in front of it, you're going to be maybe behind it. Overall, we had great success, but there are times when, you get challenges thrown at you. You might have an activist, shareholder that comes into the stock to make some changes happen, which did. And some people might look at that and say, "Oh, that must be awful." Well, maybe it wasn't awful. It was actually just a challenge and a learning experience that now, use, out into the future, whether that's, as a board member someday or, CFO in another lifetime. There's ways of looking at it from a very positive standpoint as well. And that's what I tried to do. It seemed like every 2, 3, 4 years, a new set of challenges would come along. And that's really what kept me there for that long too, is that it kept me very interested and engaged.
Curious if along the way you feel as if, and this, I don't want to put you on the spot here, but you feel as if you acquired some, guiding principles that you, in that decade, and that even today, they remain with you. Yeah.
Good question. I kind of pride myself on a couple things. One is I mentioned hiring good people and good talent, giving them the tools and the resources and the support for them to succeed. Many of the people that I'd hired at Commvault are still there today and have had, long and very successful careers. And that just gives me a lot of personal pride right there in that. I would also say I also try to have an even keel to things so that, don't let yourself get too high and don't let yourself get too low. Because again, it's not going to be this like straight line that's going to go linear. You're going to have some ups and downs along the way. And I think it's important just to kind of stay even keel. That's good for employees. It's also good for shareholders and the investing community to see someone who has a steady approach to things. I also think that, we had this old saying there, it's the grandmother test, right? And always doing the right thing. And, you never want to lie to your grandmother. And we always had a very, very high ethical bar. And I think that's important too. So I think it's the three things I mentioned, surrounding yourself with great talent, staying even keel, and also doing the right thing from an ethical perspective that has carried me throughout, my career.
Well, thank you for those. We might have a few more career-related questions a little later for you. Tell us about SailPoint. What is this company about today?
Great. Well, we're in the broader cybersecurity space. We're in a niche called identity security management, where we manage access to applications and data across enterprise companies. We sell to half of the Fortune 500. We're embedded there. We're in 25% of the Fortune Global 2000. We've got a who's who list of logos. And really, it's been just such an interesting journey for SailPoint. They've been at it for a long time. They've been around since 2005. So, going on 20 years. They've become experts at what they do, and they're kind of the industry leader. So what has changed over time, and what's really interesting, is that this started with really like human identity security. So really just employees for starters. And then that started getting into what we call third parties, like, still human identities, but they're not necessarily employees, but they could be contractors, just temporary workers. You still need to secure that. What's becoming increasingly more complex, and we think we're going to be at the forefront of this, is now we're starting to see machine identities in the form of service accounts and bots and, non-humans. And then on the next wave of the horizon is this agentic AI. So it's like artificial intelligence also needing that security layer associated with it. So it's been just a really, really interesting journey. We're still early in that non-human space, but we've done fairly well over the time in the human space in particular.
Well, it's been a journey on the capital structure front as well. And I think some of our listeners might know about this company recently returning to the public markets, but it's led many lives. It was once venture backed and it went public in 2017 for the first time. We're just interested to hear a little bit about, as you stepped in, of course, it was privately owned, but these shifts in stakeholder management and communication occur when a company moves from private to ownership. Can you tell us, reflect a little bit on this journey that
For sure.
you've been on since you arrived?
Yeah, no, great question. What's interesting is that Thoma Bravo actually had their first investment in SailPoint back in 2014. So they were not new to the SailPoint story. We were actually, I think, their first public offering back in 2017. And then they did exit the stock, but we stayed in touch with them. We had a very healthy dialogue with them to the point where in 2022, they started talking about, hey, how about going private again? We see opportunity here for the longer term value creation. And is that something you'd be interested in? And certainly we ran a process. But what's nice is that it was many of the same members or investment partners that we knew going back to 2014. So this wasn't a new relationship for us. It was very much of a longer term relationship. And I think that, sometimes companies go private for the right reasons and sometimes for the wrong reasons. I want to say that we went private for the right reasons because of the long-term value creation that we saw. And we've just done a tremendous amount over the last couple of years since I arrived at SailPoint. in terms of just getting ourselves in the best position possible to reemerge as a successful re-IPO into the market. And I think we demonstrated that. It's only been a little over a month, so it's very early in terms of the re-entry into the markets. But again, we're focused on now, making ourselves a success.
And we're always interested in how you measure success. Where do you hope to see this company financially and culturally in the next few years? What are maybe some of the milestones that you would look forward to achieving?
So we've been experiencing a period of high growth the last few years. I mean, this is a hot market. There's a lot of opportunity here. We've been growing our ARR number close to 30%. Half of that is through new logo acquisition. There's a lot of companies out there still primed for a more modern solution that we can offer at scale. But also we've been focused on doing this responsibly, we'll say, and doing it profitably. So we're really focused on having this balance of growth and profitability. I will say when you're growing close to 30% on your ARR, we like to favor a point of growth over profitability, but we understand the longer term dynamics of delivering both for shareholder value. And that's really what we're focused on.
Curious how you might see AI enhancing or transforming SailPoint's identity offerings here.
Yeah. So AI is actually not new to us. We've actually been using AI in our product since 2017. So we were kind of at the forefront of doing that. It really helps customers, or our larger customers in particular, with kind of role-based modeling, provisioning, certification process, like just really greatly enhances the efficiency of our overall offering. It's embedded in our platform. We don't charge separately for it because we feel like it's important for customers to make use of that for their own satisfaction. And it makes our lives a little bit easier too, in terms of delivering the best value to them. So AI is not new to us. What I think we're seeing now from our customers is as they deploy AI agents in their situations and environments, this is now creating a new set of security challenges for us. So you're basically, replacing human identities, right, with this artificial identity. And now it's getting to the point where, you have super agents, and these super agents are spawning, sub agents. So, I mean, the proliferation of this is massive. Again, creating challenges for companies, but we feel like we're squarely situated to help them. It's another form of identity from our perspective. And so on the horizon, we see that as the next wave of challenges, but also significant opportunity for us at SailPoint.
Have you, from a finance perspective, begun to look at AI initiatives a little differently? And, we're wondering if you thought they require a different budgeting or forecasting approach related to these investments.
Yeah. Well, certainly from a R&D and engineering perspective, we're using that actively. It helps us get, further down the road faster, better, quicker, to deliver more value to the market. So we are embracing that from that perspective. We also try to use AI in terms of our go-to-market approach. Just innovative things in terms of being able to come up with a pitch deck, use multiple languages, deliver a consistent message to our customers. I think those are some of the early, I'll say, value add areas. With respect to finance, we're dabbling in it. I don't think we're at the point where we can push a button and a whole set of financial statements will be accurately generated without any human interaction. But I do think that it helps you get a start in terms of whether you're drafting up a new footnote or you want to look at some analysis. Certainly the human eye needs to be put on that as well. To not invest in it is a missed opportunity. We need to invest in artificial intelligence and needs to be budgeted separately for that. It is the wave for the future. I mean, we're not going backwards. We're only going forward with this. And I think those companies that can harness that are going to be the ones that are best suited to embrace it.
Can you share with us what the criteria might be to decide where to invest in AI? I mean, is it if it's something that's enhancing the customer experience or the product itself, the offerings itself, is that more likely to get an investment than?
Right. You want the return on investment, for sure. I mean, that would be the best of both worlds, would be getting it both internally and externally, right? And I think we can do that. I think we're going to be able to, minimize human error, also increase productivity, allow humans to do more value-added roles internally by embracing AI. And I think ultimately, if we're able to drive higher customer satisfaction and retention, and also even growing our net revenue retention as a result of this, that would be the home run right there.
What about licenses for some of the language models, LLMs out there? I mean, is this something finance has gotten involved with when you see certain departments telling you they'll require, a dozen more licenses, or they'd like to acquire them? Is that something that finance is engaging in having discussions around? Yeah.
We are for sure. For example, actually, IT reports into me. So I actually love having those conversations with our CIO and making sure that, we're structuring this from, it's not to say no on spending, but how do we view that as an investment, right? As opposed to just another area of spend. Where's going to be the return on that? How long is that horizon? Maybe it's not immediate. We might have a double bubble here in terms of some spend. But ultimately, we set a goal of getting to an end state where we can actually realize the value creation on it. One thing that from my own standpoint, and we have not done as a company at SailPoint, we do not like the consumption-based model and pricing associated with this, where you have big ups and downs month on month. It's just so hard to plan for that. That's something that we kind of resisted. We resist getting into that kind of arrangement, and we resist charging our customers that way, just because the lack of predictability of the spend often is a source of consternation.
Just as far as your FP&A team and this sort of intersection, are you encouraging them to experiment with AI? I mean, I don't know, certain members of the team are perhaps more champions of it or more experimental, and others are sort of, not for me, standoffish, maybe. Don't know.
Yeah.
What are you encountering as you try to set the mindset there with this?
Yeah, I think with FP&A, I think you can be a little bit more forward leaning on AI and embracing it. I think what scares maybe some finance leaders is like the actual results that get reported to, whether it's the SEC or as part of an earnings call. I mean, you've got to make sure that those are right, and you got the right systems and processes and controls in place, that you're just not on autopilot there. But from an analytics perspective and a planning perspective, I think you can get a lot more creative with, capturing data elements that are out there and doing further analysis on it, right? So what I've seen over time is that, you have this data cube where you're pulling in, things like sales and bookings and headcount and renewals and all sorts of data elements attached to your financial profile. And you start doing, deeper and deeper analysis on it to help then with the predictability of the future and what that's going to look like, right? So, you can start looking at your funnel in multiple different ways, whether it's customer size, is it new versus existing customer? Is it on-prem offering, or is it SaaS? Is it going through a partner, or is it a direct sale? I mean, you can start look at it geography-wise too, around the world. You start capturing all those data elements and you start running, the various analytical models on that. You're going to get better and better over time. And again, it's all about leading to the predictability of the business, and that's where you kind of get your payback on investment.
Thank you for that. We are up to what we like to refer to as our finance strategic moment question. Again, this might have happened anytime during the course of your career. We're just asking you to sort of pluck out one for us. What comes to mind when we ask for a finance strategic moment?
I love that. I love that question. I would say that my finance strategic moment happened pretty quickly after I joined SailPoint. So I was very much, as you know, in a public company atmosphere. This was new to me in terms of private equity, brand new. And what I saw was the tremendous opportunity and gift we had of being private. Now, some people would say, well, you're crazy, but actually it worked out great in terms of the timing of this. First of all, I saw the level of customer that we were attracting to SailPoint. We sell to the largest of large enterprises. Some of the logos we can show you are just so impressive. I said, okay, this is great. We have the best technology from my perspective anyway. But I also noticed that we needed to do certain things. One is we changed our fiscal year to January 31st. I saw the volume of activity that was coming in during those last couple weeks of a calendar year, right around the holidays. And I think that was, it was a very risky position to be in, especially as we scale and grow and you have a higher volume of transactions. I knew that if we wanted to reemerge as a public company, that was a good move to make, was to move our fiscal year into January 31st to allow for that. So we did that. I also noticed immediately that our systems were not keeping pace with the growth profile of the business. We went through a major ERP transformation, upgrading our instance of Salesforce, but also migrating, hopefully I can say this, to NetSuite. So where I used NetSuite in a prior life, it worked very well for us. And we not only changed the systems, but we also forced process change as well. There's a whole change of mindset and culture. And then we didn't have enough going on. So then I also threw in there, okay, we got to get ready to be public again. So, we public company audits and controls and, started drafting, the S1 early. We did a tremendous amount of investor education over the last year. And it's been very busy, as you can imagine. But what I'm really proud of is that the team itself, they leaned into it because they saw the opportunity that they were being given. These were career learning opportunities in terms of them being able to meet these challenges and now have that with them for the rest of their careers. I mean, this has been fantastic for them. So we're not done. We just reemerged, and now again we're back in the public markets. It's going to carry a different set of challenges, but I think making the changes that we made was critical, and that was kind of my strategic finance moment, was getting ourselves in the best position possible to reemerge. One other thing that I wanted to double click on is we also went through a business model transformation. And when I say that is we were able to lean heavily into selling almost exclusively now SaaS as our new product offering. Those things are challenging when you're when you're public to do. When you're trying to make that migration from a business model perspective, that gets challenging. So we were able to kind of double down our efforts and really promote SaaS. And right now, the majority of our net new ARR is coming from our on-prem, our SaaS offering, not our on-prem offering. So really positive signs there. And then the last thing I'll say is making yourself an attractive re-entry into the public markets is that you have to do this responsibly. We were kind of break-even-ish a few years ago, high growth, but break-even-ish. I think now the markets value the combination of growth and profitability. They want to see both. And I think we were able to kind of refocus our efforts on that. So I know I threw a lot out there, but anything from changing our year to, getting ourselves ready to be public, major ERP transformation, leaning into the move to SaaS and becoming profitable, that it's been a busy couple of years, but I think it's been very gratifying as well.
We're up to what we like to refer to as our mentoring round, and we're going to ask you to look back again. We're curious about the first, you were a chief accounting officer all those years. You finally get to step into the CFO role. If you could go back in time, we know you got the role, and then, you just wish someone had told you this. What would you go back in time and give yourself some advice the first time you were in that role, that first 30 days, that first 60 days?
Yeah, that's a really good question. I think, I was fortunate because a lot of the mentorship I had was already in-house at my old company. So I didn't have to, I wasn't alone starting out on that journey. I had very experienced people around me. I think if I had to give some advice to a young CFO, put yourself out there externally as quickly as possible. Don't be shy. Join a CFO group. They have them around. Just being in a room with 12 other CFOs, even if you're young and you're not contributing a ton, those first couple meetings, doesn't matter. Just listen, learn, be inquisitive. Don't be shy. I think I started doing that probably 3-4 years into my CFO role because I wanted to bring more experience into that. Hindsight being 2020, I should have done that right from the start and really start broadening out my external network and not just relying upon my internal network.
Hey, you would know how many quarterly earnings calls you had at Commvault, would you?
38.
38. I was told most CFOs know the number. Yeah.
Yeah, as CFO, but again, I was really intimately involved right from the beginning. So I was always in the room and always helping prepare for the Q&A and just the overall dialogue. So it wasn't brand new to me by the time I stepped into that chair. But yeah, I was 38.
Now, just to give a sense of timing here, it will be publishing after your first earnings call at SailPoint. Right. Okay, so we caught you at this moment in time. So, yeah,
I'm restarting the clock. I'm restarting the clock over again.
The crunch is on. Well, we always like to ask our guests to reflect a little on the personal side. Brian, we know you're in your son's room. There are a few sport team banners on the walls. Tell us something about what maybe some of your colleagues don't even know about you. Tell us something about yourself.
Great question. Well, yeah, you can see some sports banners behind me. My son is actually out of the house now. He's actually living in Japan at the moment, teaching over there. But one of the things that we've always done together ever since he was little, we visited a new baseball park every year. So we're making our tour around the States. I think we're up to 17 now, if I'm correct.
Wow.
But my goal now this year is to go visit him in Japan, and we'll go see a game over there. So,
wild!
I've got my son, and I've got two lovely daughters. Again, we're almost sort of empty nesters at this point. My other daughter lives and works in New York City, and then I have a daughter who actually went to my alma mater and my wife's alma mater, as I mentioned, Villanova University. So we're happy about that. Yeah.
Also, New Jersey. Hey. So we saw the numbers in Japan, the viewers of the World Series last season with the South Korean numbers. It's something, and I'm not going to remember the exact number, but it was just amazing the audience size now.
Yeah,
watching
incredible.
American baseball. Yeah, would you have a book or a resource for us? Something that made an impression on you? Maybe you escaped with it. I don't know, or maybe it influenced your thinking in one way or another. Anything come to mind?
That's a good question. Okay, since I'll stick with the Villanova theme, their former coach wrote a book called Attitude, and how much that impacts, your daily life, and how you can control your attitude and how you see things. There's a lot of things in life you can't control, but the one thing you can control is when you wake up every morning, how are you going to view the world, and what are you going to do to change things and keep your attitude as positive as possible.
Nice. A nice share for us. Thank you for that. We are up to our final question where we're going to ask you to look forward finally. What we want to know are, what those priorities are for you for the coming 12 months. The first one being this earnings call. But what are your priorities as a CFO for the coming 12 months?
I think, as I mentioned, we've just been so busy the past couple of years, just trying to, again, put ourselves in the best spot possible as we reemerge. What I'm really looking forward to is getting back to more of the operational role that I was talking about earlier when I was back at Commvault. So, having those monthly operational meetings, doing further analytics on the business, becoming more predictable, using AI, using a data warehouse of sorts. So I'm looking forward to that now and helping to run the business, again, now as a newly reemerged public company.
Brian Carolan, thank you for joining us on CFO Thought Leader.
Thank you, Jack. Really appreciate the time today. It was a great discussion.